Good morning and welcome to the next webinar in our property owner webinar series. Give everyone a few minutes to join and then we'll get started. So today we're going to cover homestead exemptions, how you can save money on your property tax bill. And homestead exemptions are a really powerful tool for property owners, and it directly impacts their property tax bill. So we'll cover different types of homestead exemptions, how you can apply for those, and there are many that we'll cover today. During the webinar, if you have questions, we're going to use the Q&A feature, and you can submit your questions through there. Some of them we'll cover throughout the webinar, but if there's any questions remaining at the end, we'll go through and answer those. So with that, we'll get started. So an exemption is the easiest way to lower your property tax bill. And an exemption is simply just a deduction from the taxable value that you're going to pay taxes on. The largest benefit for exemptions is that some exemptions actually cap your property value growth. So it has your taxable value reduced to where you pay less in taxes. So on average, Travis County property owners saved almost $4,000 on their property tax bill in 2024 because of homestead exemptions. So exemptions are a huge benefit to property owners, and we want to ensure that everyone is getting those exemptions that they're entitled to. So before we get into any specifics of the exemptions, we need to understand how a tax bill is calculated and what factors determine how much you pay in taxes each year. So there are three factors that determine how much you're going to pay. The first of those is the market value, and that's determined by our office, the appraisal district, every year. And it's set as of the assessment date, which is January 1st. And the market value of your property is just what your property would sell for on the open market. The second factor is the exemptions that you or your property might qualify for. And we're going to cover a lot of those today. But again, the most common of these is the residence homestead exemption. And then the third factor is the tax rate. And the tax rate is probably the most important factor in calculating that tax bill. And the tax rates are set by each individual taxing entity. So your city, your county, your school district, they each set a tax rate to provide the services that are in their budget. And then that tax rate is applied to all of the property values and ultimately determines how much you're going to pay in taxes each year. The purpose of the appraisal is just to allocate that tax burden fairly amongst all taxpayers. And the process is really just to ensure that someone who has a multi-million-dollar home isn't paying the same tax as someone who has a $100,000 home. So it's just distributing that burden. There's three key terms that we need to understand in calculating that tax bill. The first, again, is market value, and that's set by our office as of January 1st, and it's just what your property would sell for. The second is the net appraised value or assessed value. And this is a reduction off the market value for any cap that your property might have because you have a homestead exemption. And then the third is the taxable value, and that's your net appraised less any exemption amounts that you qualify for. And the taxable value is what you're actually paying taxes on. So your market value less your cap gives you your net appraised. Your net appraised minus any exemption amounts gives you your taxable value. And to determine the amount of taxes you pay, you multiply the taxable value of your property times the tax rate that's set for each taxing entity. So you'll do this calculation for multiple entities. Most properties have 4 to 5 taxing entities that tax them. So you'll do it for the city, you'll do it for your county, you'll do it for your school district, and then you add up each tax amount due to each taxing entity, and that gives you your overall tax burden. The homestead exemption is the most common um, property tax exemption. And we'll cover what it is and how you qualify. But the biggest benefit of the homestead exemption is the limitation of value. And the limitation is really just a cap. It caps the value growth each year to 10%. And it is state mandated. So it's not something that we can objectively apply to people. It is state mandated and it's just calculation. And so you take last year's net appraised value times 10% plus 10%, or the current market value, whichever is less. And so in years, we hardly see this in our Travis County, Austin market, but there are years we see value decline. We saw it in 2008 and 9 during the Great Recession, and many property owners this year may see a value decrease. But generally, our market's been pretty robust, and we see value growth every year. And so if you have a homestead exemption, your value growth is limited to that 10% per year, which is a huge benefit in years like during COVID 2021 and 2022, when we were seeing 50-60% value increases in some areas of Austin. Those people who had a homestead exemption, they were capped at 10% per year. So it makes that tax bill and the increase in value a little more predictable. So that's a huge benefit of the general residence homestead exemption. So the most common exemption is the general residence homestead exemption. And this exemption is for owner occupied residential properties. And really the only qualification is that you own and occupy the property. Again, the biggest benefit is that value limitation at 10% per year. And then you'll also get an exemption amount. So the homestead exemption has a state mandated exemption amount and then a local option exemption amount. And all of the exemptions we're going to talk about today have these two factors. So you have a state mandated amount, which is the Texas legislature has told us that they are going to provide an exemption. And most of the time, this is for school districts. And then you have a local option exemption, which gives the other taxing entities the option to offer that exemption. So for example, Austin ISD has a state mandated $100,000 exemption. The state has told the appraisal district to apply that exemption to all school districts. It's mandated. On top of that, City of Austin, Travis County, the healthcare district, they've all adopted a local option exemption at 20%. We have all of the taxing entities in Travis County. There's about 200 of them on our website, and you can look for your taxing entities to see all of the exemptions that they offer. In order to qualify for the general residence homestead exemption, the property must be designed and adapted for human residence and be the principal place of residence. So essentially, you have to own and occupy or live in the property. A homeowner, you have to own and occupy the property, and you can't be claiming another exemption anywhere else. That's anywhere else in the United States, in the world. You can only have one. And then you do have to file that initial application for the homestead exemption by April 30th. Some property owners may be eligible to receive a prorated exemption in certain cases. So if the property that you're purchasing doesn't have a homestead exemption on it from the prior owner, and you're not claiming a homestead exemption on the house that you sold, before you moved, then you could prorate your exemption back to the date that you move into the property. So for example, if the prior owner, the person you bought your home from, you purchased that home in February, and they did not have a homestead exemption, and you're a first-time home buyer, you don't have an exemption and you haven't owned a property anywhere else, you could then prorate that exemption and get a portion of that exemption amount going back to February when you purchased and lived in the property. Now, one key thing to remember with the proration is that the limitation won't apply. So the limitation applies as of the first January 1st that you own the property, and it sets that base year for the limitation, but you'll still get a prorated exemption amount. So a portion of that $100,000 in the case of a general residence homestead for a school district. Another common exemption is for property owners who are 65 years of age or older. This exemption has a state mandated amount of $10,000 for school districts. And then the over 65 exemption can also be a local option exemption. The best part about an over 65 exemption is the tax ceiling. You'll hear this a lot referred to as a freeze in the school district taxes. But the year you turn 65, that freezes your school tax amount, and you'll never pay more than that amount as long as you don't improve your property. You'll never pay more than the amount of school taxes you paid the year you turn 65. This is a huge benefit. School taxes are usually about 50% of our tax bill, so freezing those is a really big benefit for property owners. Tax ceilings can also be transferred. So if you were to move to another home, that ceiling amount and the percentage of savings that you get can be transferred to your new property. Other taxing entities can adopt a local option over 65 exemption. It isn't a flat dollar amount. So Travis County, City of Austin, the Healthcare District, they have all opted to offer a local option over 65 exemption. The amounts vary by taxing entity. And again, you can see all of those on our website at traviscad.org/homestead exemptions. And then other taxing entities, and they don't take advantage of this as often, but they can adopt a local option tax ceiling. Currently, the City of Cedar Park does this, City of Leander, and ACC. They all offer a tax ceiling option as a local option. The one thing that's different about it is non-school district taxing entities, you can't transfer that ceiling amount if you were to sell your property and purchase a new home. So to qualify, you have to be 65 years of age or older. Your property has to be your principal place of residence. And again, you can only claim this one of these exemptions. So you can't claim it on multiple properties. And the surviving spouse of someone who's over the age of 65 can also qualify or inherit the exemption from their spouse. A couple caveats: you have to be at least 55 years old when your spouse passes away. And then your spouse was receiving the exemption or would have qualified for it when they passed away. So there's also an exemption for people who are disabled, and it operates very similar to the over 65 exemption. So usually a property owner would qualify for a disabled person's exemption if they're receiving SSI payments from the Social Security Administration. Like the over 65 exemption, disabled person exemption has an exemption amount of $10,000 that's state mandated for school districts. And then it does also establish a tax ceiling or that freeze amount for the school district. And again, the tax ceiling can be transferred or ported to another property if you purchase a new home. And then taxing units other than school districts can also adopt a local option exemption amount for disabled persons in a flat dollar amount. And again, just like the over 65, you cannot transfer the tax ceiling for non-school district taxing entities. So to qualify, you must have a medically determined physical or mental impairment. The impairment must prevent you from engaging in any substantial gainful activity. And then the impairment must be expected to last at least 12 months or result in death. And just like the over 65 exemption, the surviving spouse can also qualify or inherit this exemption if their spouse passes away. Again, they have to be at least 55 years of age when their spouse passes away, and then the spouse was receiving or could have received the exemption when they passed away. So if you qualify for both the over 65 and disabled persons exemption, you can apply for both, but you can only claim one per taxing unit. So Most of the time, the taxing unit keeps these two exemption amounts the same, so you don't benefit one way or the other. But there are a few scenarios and a few different taxing entities that have different amounts for the disabled person and over 65 exemption. So if you fall into this scenario, you can go to our website, look at each taxing entity and see if one or the other would offer you a better benefit. Again, that they're all listed on traviscad.org/homestead exemptions. If you're a disabled veteran and you're 100% disabled, you can apply for the disabled veteran homestead exemption. And this is 100% exemption. So you pay no property taxes on your residence homestead. And that covers all taxing entities. So school district, county, city, no tax bill. To qualify for this exemption, you have to be receiving 100% disability compensation due to a service-connected disability and have a 100% disability rating or an individual unemployability rating from the Department of Veterans Affairs. So with the application, you'll need to provide us with your VA letter that outlines your benefits and your disability rating. The surviving spouse can also inherit this exemption, but they cannot be remarried and they have to continue to own and occupy the property. So to summarize, this exemption is for veterans who are 100% disabled and they have to have a service-connected disability. And it's a 100% tax exemption. There's also an exemption for veterans who don't, I'm sorry, the 100% disabled veteran exemption can be prorated. So if you get a VA letter and it's dated, March 1st, we can go back and apply that disability rating to the date on the VA letter. There's also an exemption for disabled veterans who are not 100% disabled. So this is with a service-connected disability, and it can apply to properties that aren't your residence homestead. So if you have, you could put your residence homestead and over 65 on your primary residence. And then if you had a investment property or rental property, you could put the disabled veteran exemption on that property. This is a dollar amount exemption, and it ranges from $5,000 to $12,000 depending on your disability rating. So to qualify, the veteran must be classified by the VA as a disabled veteran with a service-connected disability of 10% or more. They have to be a veteran and a Texas resident. And again, the surviving spouse can inherit this exemption as long as they haven't remarried and they are also a Texas resident. The surviving spouse of an armed service member killed in action or a first responder killed in the line of duty can also qualify for an exemption. This is a 100% exemption from all property taxes, and it's state mandated. Heir property owners can also qualify for a homestead exemption, and this was a change in law a few legislative sessions ago. And a lot of times, if a property's been in a family for a long time, the deed hasn't always been filed and transferred down to the heirs of the property. There's not a clear ownership record. And so they came up with this process for heir property owners to still get that exemption that they're entitled to. So to receive the homestead exemption on an heir property, you'll need to provide us with an affidavit establishing ownership and heirship, a copy of the property owner's death certificate, a copy of the most recent utility bill, any court filings that you have associated to the heir property, and then there's an affidavit authorizing the submission of the application. And those affidavits can be found on our website, but the affidavit that you would submit with the application is just saying that if there's other heirs on the property, they're authorizing you to claim the homestead exemption on the property because you live there. So to apply for any of these exemptions, you have to complete an application. The applications can be found on our website. We also have online applications that you can submit through a portal that get processed much quicker, so you get a response much quicker. You have to complete the required application and include any additional documents that's required. And again, the deadline to submit those applications is April 30th of each year. And I always stress this, but it is free to file for your exemption. A lot of new homeowners get flyers in the mail, solicitations that are asking them to pay for someone to file your homestead exemption. You don't have to pay anyone to file for an exemption. It's free. It's a really simple process. So we encourage you to do that on your own. Our staff is here to help if you have questions or need assistance. So don't pay anyone to file that exemption for you. Many of the applications require additional documents, and the main one to remember is that you have to provide a Texas driver's license or ID card with a homestead exemption. The address on your driver's license or ID has to match the property address if it's one of those homestead exemptions where you have to own and occupy the property. And again, it's a Texas driver's license or ID card. Those are the only two forms of identification that we're allowed to accept. We can't accept a passport or a concealed carry license or any other identification. It has to be a Texas driver's license or ID card. If your name's not on the deed, you have to provide evidence that establishes ownership. So a lot of times with married couples, there may only be one person on the deed. And in this scenario, you would just need to give us some evidence to show that you're both owners of the property. So what other documents are required? For the over 65 exemption, you have to prove that you're of the age to get that exemption. So driver's license with your date of birth on it would suffice. The disabled persons exemption, you have to provide proof of that disability. So most commonly, this comes from a Social Security Administration disability letter. For the disabled veteran exemption, you'll have to submit that letter from the VA that outlines your disability percentage. And then for first responders or their spouses, then you would need to provide the letter from Employees Retirement System, ERS, as part of that required documentation. So there's also an exemption for solar and wind energy devices. And it's these have to be owned, not leased. That's the main issue that we see with these solar and wind exemptions. They have to be on the property, they have to provide energy on site, and then the owner owns the property and the energy devices on January 1st of the year. Again, lease systems are not considered real property, so you don't get an exemption for those. They're considered personal property and they're actually not taxed. So we'll cover what you do if you're in that scenario. So to apply, the application for this exemption again can be found on our website. We also offer an online, easy to submit application. Along with the application, you should submit documents detailing the installation date and the total output of the system. If the device was installed before the property was purchased and was included in the purchase price, you can include a statement to that effect and with your supporting documents. The online application and more information on the solar and wind energy device exemption can be found on our website at traviscad.org/solar. Again, the application deadline for this exemption is April 30th as well. And if your devices are leased, you can just send us an email to spex@tcadcentral.org and include your property address, your property ID number, and then just a statement that the system is leased. Again, lease systems are not real property, so they're not taxed, they're personal property. So if you get your notice of appraised value and you see that we have a solar exemption on there or a detail line that shows a solar device and you lease that system, just send us an email and let us know and we'll get that corrected. So common concerns that we hear from property owners concerning exemptions. If you're a married couple and both are on the deed, do both people have to sign the application? And no, we only need one owner to submit the application. You can only receive a homestead exemption on one property in each tax year. So you can only claim it once. So if you buy a new property during the year, you can only claim the exemption on your new property if you didn't have one on your old property. Generally, January 1st is the date for exemption. So it's kind of a snapshot on January 1 of the property and the characteristics. So if you have an exemption on your prior residence on January 1st, it stays there for the whole year. And then you may be eligible for multiple exemptions, and a lot of them can layer on top of each other. So you could have a homestead exemption and an over 65, and they layer on top of each other. So in most cases, again, the exemptions reflect the owner as of January 1. That's snapshot. There are some instances where you can prorate. We talked about those briefly earlier. But generally, January 1 is the snapshot in time. You can also file a late homestead application going back 2 years from the delinquency date. So if you missed that April 30th deadline, don't worry, you can still submit it. And if you've paid your taxes for that tax year, and then we retroactively apply that exemption, you would be due a refund for any taxes you paid. So generally, once you file for a homestead exemption, you don't have to file again. There are a few scenarios where you may be asked to file again. One of those is if a new deed is filed on your property. And a lot of times this happens for estate planning. You move your property into a trust, you update a name, you get divorced or you get married and you add or remove an owner. Those are all things that may trigger you to need to file a new homestead exemption. There are also scenarios where we may ask you to refile a new exemption application. Is there a reason the appraisal district might think you moved? Is we get a lot of neighbors that call in and say, my neighbor hasn't lived in their property for over a year and they have a homestead exemption. So we may ask you to reapply in that scenario. And then if you've had your exemption for more than 5 years, we may ask you to reapply. We have a new law that we'll talk about on the next slide. State law passed back in the last legislative session, so the 88th session, requires appraisal districts to audit homestead records every 5 years. So we're using a phased approach. So if you've had your exemption for more than 5 years, you may get a letter asking you to reapply or reconfirm some of the information for the exemption. If you didn't get a letter and you've had your exemption more than 5 years, don't worry. You will get multiple notifications from our office if we need to audit your property. Again, several notifications before any exemptions are removed. And then property owners need to meet the current eligibility requirements of the exemption. So for example, for the homestead exemption, the driver's license requirement was passed in 2009. So many people had a homestead exemption prior to that, where they didn't have to submit a driver's license. When they're going through the audit process, they'll be asked to reapply because we now need that driver's license on file as proof for the exemption. And then not completing that verification process will cause your exemptions to be removed and those benefits lost for the homestead exemption. You'll see an increase in your tax bill. So make sure you're responding to us. It's a 1-page document, 5 questions, and then you give a copy of your driver's license. Really quick and easy process, but please respond so you don't lose those benefits. We also have an exemption hotline. You can call us at 512-873-1560. We have staff available Monday through Friday, 9 to 4:30 to answer any questions about exemptions. You can also go to our website, www.traviscad.org/homestead exemptions. We have a lot of great frequently asked questions and information on exemptions. We also, again, offer that online homestead exemption application, and the processing time is decreased substantially with that online exemption application. So we encourage you to file online and get a quicker resolution. We also have a property owner toolkit, and this is for new homeowners or someone who's purchased a home. And it really just gives them information on the property tax system, information on homestead exemptions, the property tax calendar, those key dates you need to know as a homeowner. That can be found on our website at traviscad.org/toolkit. And we do have a homestead exemption clinic coming up on Saturday, March 29th. It'll be from 10:30 to 12 at the Pflugerville Public Library. So if you have questions or you've received a verification request letter but haven't responded, you can attend that exemption clinic. It's come and go. You can ask questions, bring us your verification form. And so we'll be there from 10:30 to 12 to help with any exemption questions. And with that, we will go ahead and look and see if we have any questions. How can I get an estimate of the reduction for 2025 homestead? My mortgage escrow department is requesting something in writing before they will adjust my monthly escrow for taxes. So if you have newly applied for a homestead exemption and it'll go into effect for 2025, your notice of appraised value, which is mailed in mid-April, will show the homestead exemption. And generally that has sufficed for escrow companies. What is the definition of significantly improving your home? If you do an age and replace refurbishment, how does this impact the improvement classification? So improvement and appraisal isn't the term is used differently. So an improvement on a property and appraisal is you're remodeling or adding an improvement. And so, there's a lot of guidelines on what we what we appraise and how we calculate the improvement value. If you have questions about your specific property or more in-depth appraisal methodology, we'd be happy to answer questions for you. You can call our customer service department. We can answer those questions. I completed my application in February. How do I check if it was accepted? How long do I have to wait for a response? So for homestead exemption applications, you will not get a notice that it's been granted. You'll only get a notification if we need additional information or if it's being denied. So on your notice of appraised value, you'll see the HS exemption code. You'll see that on the first page of your notice. You can also call our customer service group and ask if it was granted. But again, you'll get a notice if you don't, if you need to send us additional documents or if we've denied it. I received a card to update, but got confused about what form online. I've lived here continuously since 1991. So we got this question a lot. So our online portal has two forms. There's a verification form for those that already have a homestead exemption, and we just need a few questions answered. Then there's the full application form. You can fill out either one. We encourage you to fill out the shorter one because it's not as much work. But if you were to accidentally submit the wrong form, we're still going to review the application and make sure your exemptions don't come off your account. There's a question about transferring a homestead exemption to a new property. So a homestead exemption, just the general residence homestead, cannot be transferred. Again, it's that snapshot as of January 1. So on January 1, did you own and occupy the property? If yes, then you'll have that homestead exemption for the full year. Now, over 65s have that transfer, over 65s and disabled persons, DVHS, there's the option to transfer or port. And we can walk you through a calculation. It's pretty in-depth, but essentially you get to transfer the percentage of tax savings to a new property. So there is a question about disabled veterans. So disabled veterans have two options. For those veterans who are 100% disabled with a service-connected disability, they can get a 100% exemption. That's state mandated through the legislature. For those who aren't 100% disabled, so anywhere from 10 to 99% disabled, there's a dollar amount exemption that can be applied to your home or any other property you own. So the dollar amount depends on the actual disability rating. You can find that on the application has it, and as well as our website. There's a question about ag exemption, and ag isn't an exemption. So ag is a special valuation, and the legislature has said for those who perform agricultural activities, they get a special valuation, or we appraise their properties a different way because it's an ag. So if there's questions about acreage being lost and what the ARB has determined, I would encourage you to call customer service, but you can have a homestead on an ag property. So you have your home on half an acre or 1 acre, and then you farm the other 10 acres or 15 acres. You can do that. I encourage you to call in and ask specific questions about your property so we can help you get that exemption applied correctly. And I think that is all the questions we have. There is a QR code up on the screen if you'd like to leave us any feedback about the event. You can also do that through our website, but we'd love to hear how you thought the webinar went, if there are other topics that you'd like us to consider doing in the future. So you can do that through that QR code or through our website. And thank you all. I hope you have a wonderful rest of your day.